Good evening. This is Brian Shannon from Alpha Trends Blogspot. It is Monday, November 20th, 2006, and we're going to go ahead and take a look at some stocks for trading on Tuesday. I've got Akamai on the screen right now, symbol AKAM. We looked at this one last week on Wall Strip, and I think that the stock was kind of stuck near that $50 level due to options expiration issues. But it looks like the stock is ready to get going again. The stock had a really nice rally from the 40 to up to about $53 a share here recently. Pulled back and found support along the rising 50-day moving average. Now we've got the 10-day moving average back above the 20, which is above the 50, and it looks like the buyers are stepping it back up again. And we see that same volume pattern that we're always looking for, which is increasing volume as the stock rallies, followed by lower volume relative to that on the consolidations. And today we had another little increase in volume as the stock started moving higher again. Now, when we look at the 10-minute time frame, you can see that the stock broke past a little bit of resistance. That resistance became support, and we had a little bit of a rally late in the day up towards 50.35. But the way I'd like to see this stock trade would be to pull back to $50.10. Once it's done that, I would then buy the stock above $50.25. So I'd want to buy it on strength after a little bit of a pullback, and I would set my stop at just below these lows from this afternoon at $49.68. And I think it looks like the stock can make it up towards about $52.50. So overall, that would give us a potential target about $1.75 away, and our risk would be 57 cents in shares of AKAM. Next up, we're going to take a look at Aeroflex, symbol ARXX, and you can see that this stock is doing the same, up on big volume, low volume consolidation, increasing volume on the rally, decreasing volume on the consolidation. This resistance looks like it's maybe going to act as support in this area. We've got a rising 10-day moving average catching up to the stock here. So it looks like the stock is poised to continue higher again. And you can see it found support along that 5-day moving average here in the intraday time frame. Now in this stock, what I'd like to see is just a straight buy above today's high. So once the stock can clear $12.31, I think it looks like a good candidate for a purchase, and a stop would go just below $12.10 in this one, so a risk of about 21 cents. And it looks to me like the stock can make it up towards about $13.25. So that would be a target of 94 cents away for a risk of 21 cents. I do have one low price New York Stock Exchange stock that I'm going to mention at the end of this. It trades 6 million shares a day, so make sure you stick around for that. China Automotive, symbol CAAS, had a very big volume event right in here, followed by lower volume as it's consolidating those gains. And this is one of those stocks that just really gets moving when it gets going. So it's worth keeping an eye on here. As far as the quality of the stock, it's probably not very high, but let's take a look at where I think this stock could be bought. Basically, above $10.35, I think you could purchase shares of CAAS, China Automotive, and a stop would then go at $9.95, which is right about this level right here. So that would be a risk of about 40 cents. And I think the stock can make it up towards about $11.75, and that will give us a target that is $1.40 away for a risk of about 40 cents. SMSI, this is Smith Micro Software rather, and looking at a weekly time frame, you can see it's in a very nice uptrend here, and the daily time frame, it got hit a little bit in here, but recovered nicely. Now it looks like it's rallied on some volume here. Low volume, little consolidation, like it's building a little launching pad. And I think that in order to see this stock moving higher again, what we needed to do is to get above $17.05. Above 17.05, I'm going to consider this as a candidate as something I would potentially purchase, and I'd set my stop below the lows for today, which is 16.72. Now, what I'd really like to see would maybe be a rally up to 17, then a pullback to 16.85 or something, and then another rally and it breaks out. If that were the case, I would say put your stop under the higher low if we have that. That'll be our official call, is that for now, we're going to say the stop goes at 16.72, but hopefully we can get that raised up. So our target in here on SMSI would be about $18.50 a share. So even as it is with a stop at 16.72, that's just a risk of 33 cents. compared to upside potential of about $1.45. So it makes for a very nice risk reward. One short sale, and then that small New York Stock Exchange stock I was talking about. This is Cubist Pharmaceuticals, CBST. I've mentioned this one several times over the last month or so, but it just can't seem to want to break down in here. Not yet, at least. It looks like it's hanging on the edge. It's at the apex of this triangle. It should be doing something in here soon. We've got the 10-day moving average below the 20, which is below the 50, and they're all declining. So it's just looking like the stock is very vulnerable in here and getting ready for a breakdown. You can see this little upsloping trend line that defines that lower portion of the triangle that I was just pointing out. And here, if we look at the daily time frame, the triangle, we can see that it's getting. It should have really broken by now, but typically they break 2/3 to 3/4 of the way towards the apex of the triangle. But let's see what happens in here. Now, the stock broke down today, and it rallied up late in the day, so that's good. That's what I like to see. I want to see now that the stock can get moving to the downside again. So I'd like to sell it short below $21.55. Below that, I think that the buyers are going to get frustrated, throw their stocks away. We'll protect ourselves with a stop at $21.78 is what I'm recommending, and a target would be about $20.50, so down towards this level here. And if that were the case, then we would be risking 23 cents for the potential to make about 95 cents. Now, this last stock is a Chinese company, and the Chinese stocks have been very hot. It rallied above that 200-day moving average just recently here and cleared this resistance at the $3.20 level. So this resistance looks like it's acting as support. We saw a nice increase in volume on that way up, lower volume as it consolidates in here. Looking at a weekly time frame, it looks to me like the stock has the potential to make it up towards $3.50, maybe $3.80 if we get lucky in this thing. But we've got that nice higher lows in here, and it just looks like a matter of time before it takes these highs at 330 out. I don't want to buy the stock above 330. Instead, I think we can buy it above the highs of just the last couple days, which are $3.24. If it gets above 324, I'm going to consider buying the stock and maybe even add to it above $3.30. But my stop would then go below these lows here, so my stop would go at $3.17. That would give us a risk in here of about 8 cents a share, and a target, let's just be conservative and say it's $3.75. Would you risk 8 cents to make 50 cents? That's essentially what the bet is on a risk-reward basis. Again, the average daily volume over the last 20 days is just over 6 million shares. The name of the company is United Microelectronics Corp., symbol UMC.